Good morning everyone and welcome back to Morning Markets here at True Potential. Now you'll notice on screen that February has got off to a very strong start with broad price moves for equities and bonds upwards, continuing the theme from January which Jeff Casson discussed on yesterday's Morning Markets. Now we're going to broaden out the concept of disinflation which Jeff discussed yesterday, which colleagues have discussed since before Christmas with you, to help understand what's driving the move upwards in asset prices. Now, one of the proponents of that was yesterday's meeting, the first of the year for the US Federal Reserve, the central bank there. Now, there was a 0.25 percentage point increase in the official policy rate. That takes interest rates in the US to 4.5 to 4.75%, and also further smaller increases were communicated as likely over the rest of the winter into the spring. So we'll see 0.25% as being the most likely increase going forward. However, markets are forever looking forward and are now looking through these hikes at this building disinflation pressure. This is the idea, the broadening concept that inflation has well and truly peaked and is decelerating downwards. So we're not seeing prices fall, but we're seeing the rate of change in broad prices decelerate and trend downwards more than was expected. And it's these downward surprises which are most dominating the market narrative. Now, Chair Powell, the Chairman of the Federal Reserve, didn't reference these surprises that much yesterday, but he gave enough nuance for the markets to latch on to the idea that the Fed are aware that inflation is surprising to the downside. Inflation at the end of last year came in below their refreshed target, substantially below in fact, and it's giving them some room to perhaps update their forecasts in March to show that the hiking cycle will be over at that meeting and they will likely have rates on pause. Now, markets are looking forward to that already and believe that the Federal Reserve, these next few hikes, will actually overdo it and that the Fed may in fact be cutting rates come the summer, such that rates by the end of the year will be no higher than they were at the start of this year. And this is feeding into much lower bond yields on places like the 10-year US Treasury bond yield, which you'll see on your screen, fell considerably overnight. That's feeding through into other markets, for instance, the 10-year German Bund, and even here in the UK, we're seeing substantial falls in the 10-year UK gilt. And that's capturing this narrative of interest rate cuts possibly coming towards the end of the year, and that's helping boost equity prices. A lower discount rate is feeding into much higher valuations on equities. So this disinflation narrative, which is really taking hold in the US and is extending out to the Eurozone with falling inflation there as well, will soon broaden out into the UK. And once the energy price cap freeze base effects start to roll off from the UK come April, we're going to see substantial falls in inflation rates here as well. Which takes us to today, where we have both the Bank of England and the European Central Bank meeting. Both central banks are expected to increase interest rates 0.5 percentage points. That won't be a surprise for markets. What markets will be watching most closely is the language around future interest rate hikes and where both central banks see rates finishing up, the so-called terminal rate. Where will rates get to? Well, at which point the central banks will call an end to the hiking cycle. In the UK, the markets are priced for interest rates to get to 4% today and possibly peak out at around about 4.5% by the early spring. So please do join us tomorrow, where we'll give you an update on that. But in particular, please join us on Friday's podcast, where we'll focus on all of these central bank meetings, what it means for interest rates and inflation, and we'll also focus on the latest IMF forecast for the UK economy, and the panel from True Potential Investments will discuss what it looks like for the UK growth outlook for the rest of the year. Thank you very much.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.